Hello and welcome to Learning Objective 4.2, completing the worksheet. Yeah. Sorry, went to the wrong place. Okay, so remember, here is our worksheet. We've got the first column is exactly a repeat of our trial balance. We had to add a few accounts down at the bottom here. To complete our adjusting journal entries, we had an adjusting journal entry for supplies to record the used up portion of our supplies. We had to adjust prepaid rent and recognize 1 month of rent expense. We had to depreciate computer equipment for 1 month. And we also had to recognize salaries that were not yet being paid until the following month, but we had to recognize that expense in May. Okay, so the adjusted trial balance is the next set of columns, and that summarizes the information in the trial balance and adjustments. Sorry, just a minute. Let me see. Okay, they did not total the adjustment column here, but you usually do total the adjustments before moving on to the adjusted trial balance to make sure your debits and credits are in balance. Okay, so the adjusted trial balance is very similar to the regular trial balance. All you're doing is adding in the adjusting journal entries you did. Okay, so if you have two debits, like a debit on your trial balance and a debit on your adjustment journal entries, they'll be added together. If you have two credits, they will be added together and become a larger credit. If you have a debit and a credit, you will take the difference. Okay, so like cash, your first line here, you got your debit and there's no adjustments, so you just bring that balance over. Okay, accounts receivable the same. Computer supplies, we did have an adjustment, so we had a $600 debit. We had a $500 credit, so we take the difference, 600 minus 500. Your resulting balance is a $100 balance. So you're really just footing across, okay? But you gotta, recognize which columns these are in. Okay, for prepaid rent, we got $1,200 prepaid rent. We had an adjustment for our rent for the month, $400. So our ending balance of prepaid rent is $600. Okay, so equipment is not adjusted here, right? Because we said depreciation is put in an accumulated depreciation account and then displayed that way on our balance sheet. Okay, accounts payable was a liability. You just move that credit across. Capital is a credit, you move that credit across. Withdrawals, you move that debit across. Graphic design fees, you move that credit across. Now for office salaries expense, you have a debit of $1,300. We recorded $350 in salaries expense a debit, so you got to take the difference. Or no, sorry, I'm saying that wrong. You have the debit here of $1,300 and you have to add the debit of $3,500 and you end up with $1,650 in expense. Advertising expense just moves across and so does telephone expense. You continue to do the same down here with your computer supplies expense. You had a debit and you had nothing in the original trial balance, so you just move that debit across. You move rent expense, the debit across. Depreciation expense, the debit across. Accumulated depreciation is a credit. You move that across to a credit. And then your salaries payable is a liability. Okay, so you have your trial balance account. You have your adjustments. You total, your two columns need to become in balance in your trial balance. Your adjustments columns, your debits and your credits need to be balanced, and then your adjusted trial balance is just the addition of your trial balance plus your adjustments to get your adjusted trial balance. So just a new resulting trial balance. Again, It should be in balance, okay? Otherwise, there's a problem. Okay, this lists what the normal balance is on these accounts. What you need to do now is you are taking your accounts from the adjusted trial balance and you put it either goes to the income statement columns or the balance sheet accounts, because this worksheet is going to help you do your financial statements. So the last 4 columns are the income statement and the balance sheet. Okay, so what you do is, we'll go to the next page. I think it's easier to explain there. So we have our adjusted trial balance. Remember, we had our trial balance and our adjusting entries here, but just for space, they've left that here. What you do is we go down, and I wish they'd have the balance sheet, because you'd go down in the accounts that go on the balance sheet, you move to the balance sheet. But we're going to start with the income statement. So we got graphic design fees as your revenue account, and that is a credit balance, so you move that over to the credit balance account. And then you list all your expenses, which they have a debit balance, so you list those here. Okay, you even go down here, any expenses you had. Okay, then you add up your columns. Now, your debits and your credits are not going to balance because you got revenue minus expenses. And revenue minus expenses on the income statement is your net income, right? So if we take our revenue of $8,000 minus our expenses of $3,100, we have a net income of $4,900 that we place in this next line. And you can see over here in the account titles, you have net income. Then you put, and then your debits equals your credits. Okay, when I'm asking things about what is unusual or different about a worksheet, this is what I'm looking for in our discussion questions. Talks about this, how you have this net income and then you balance. And on the balance sheet, you are going to still pick up this $4,900 to make that balance. Because remember, your revenue minus your expenses goes to your retained earnings statement in the form of net income. Okay, so here, now this is a more complete worksheet, but we have the balance sheet column up here. So all our assets, our liabilities, and our capital and our withdrawals all go across over here to complete our balance sheet. You know, and we just take them from our adjusted trial balance, the same, debit or credit that they are listed at, and they should be their normal account balance. Okay, you got accumulated depreciation, you got salaries payable, which is the liability you're picking up down here on the bottom. You add up all your debits and your credits on your balance sheet, and then you take the difference of those, and you have $4,900, which is the same as your net income over here. Because remember, in your capital and in your retained earnings statement, you bring the net income over to your balance sheet. So now your balance sheet will balance as well. So that is something I think that's, one of the most unique things you can say about this balance sheet, is that you have these net income numbers. So now we have our trial balance, we have our worksheet, we have our trial balance columns, we've got our supplies, we've got our adjusted trial balance. Okay, this is kind of a key point here where these lines are here, but we had our beginning computer supplies. These are the ending computer supplies in our supply cabinet, and these are the amount that have been used up, so that's why we're expensing it. It's kind of the same scenario for this rent. We had this prepaid rent, and now 1 month has expired, so our remaining balance is $800. Okay, now the scenario, the reason why this is important for supplies, and I think, this is what I think is important for you to get. Sometimes in a thing, it won't, in your example or your textbook example or problem, it'll say these amount of supplies are what you had on hand at the end of the month. So sometimes it'll give you this number, and you have to calculate what amount has been used up, which you'd have your beginning balance, and if they're giving you the balance at the end of the month, you have to say 600 minus 100 is 500. Okay, so just important to keep this in mind when you're looking at these types of things. Okay, and that concludes that learning objective.